today we are jumping right into the thick of it. We're focusing on a sector that has been, well, just absolutely decimated over the last 18 months or so.
Yeah, it's been brutal. They've earned that nickname, the lithium winter.
A fitting nickname, if a bit painful. Prices collapsed, money fled. It was a complete washout.
It really was a huge sector-wide correction after years of, a lot of speculative excess. Lithium prices dropped, and these companies saw their valuations get cut in half, or sometimes even worse.
Yeah.
Just a massive wave of fear.
But it looks like the ice might finally be starting to crack. We've synthesized an in-depth analysis on Lithium Americas core, that's ticker LAC, and it just saw this massive single-session breakout. It jumped 9.22%, closing at $5.21. I mean, that's a move that gets your attention.
It's a huge attention grabber, yeah. But the analysis we're looking at goes so much deeper. It provides a really data-driven and, frankly, a highly optimistic view. A strong bullish case for LAC.
After all those months of just going sideways or down.
Exactly. And this sudden rally isn't random. It's being fueled by two enormous and very specific catalysts. Who's talking about the financial backing of General Motors and the strategic commitment for the U.S. Department of Energy.
Okay, so that's the core mission for us today to really understand this moment. You've got a stock that's been pummeled, now showing the sudden high conviction move. So for you listening, the question is this the actual start of a trend reversal? Are we looking at what might be the last chance to get shares in a potentially huge asset for under $6?
Let's unpack it. And I think we have to start with that price action.
Yeah, let's start there.
Okay, so the data really paints a picture of who was buying. The previous day's close was $4.77.
Right.
LAC gapped up immediately at the open to $4.88. And this is the critical part, it kept climbing all day. It closed at $5.21 for that full gain of 44 cents.
A nearly 10% move is huge. But, we often see these rallies on opening hype, and then they fade away as people take quick profits. Why is this one different?
That's the fascinating thing here. The conviction was sustained. The stock held those gains all day. It never faded back.
Never.
And that's so crucial because it suggests real institutional involvement. We're talking about the big money, deep-pocketed firms positioning for the new year.
So not just retail speculation chasing a spike?
Not at all. And the heavy volume that came with the move just confirms that signal. It screams institutional confidence.
So it wasn't noise. It was serious capital placing a bet.
Precisely. And that strength even carried over into after-hours trading. It ticked up a little more to $5.24. So this action, it sets a really strong technical foundation, which we can get into later. But for now, it tells us one thing.
What's that?
Institutions are not buying noise. They're buying into a concrete fundamental story.
That's the perfect transition. A great-looking chart doesn't mean much without a strong anchor. Let's shift from the price action to this golden opportunity thesis. It's all about the Thacker Pass project in Nevada. And this is where things get really, really interesting.
Yeah, Thacker Pass is the absolute foundation of the entire bullish case. And we need to frame this correctly. This isn't just, some potential mine.
Right.
The report really emphasizes this. It is the single largest known lithium resource in all of North America. Its sheer scale is what gives it this unparalleled strategic significance.
Okay, but I have to play the skeptic for a second. If this asset is so massive, so vital, why was the stock trading at $4.77 just last week? What was the market missing?
Well, the market was pricing in execution risk and, of course, the macro environment of the lithium winter. But those factors are changing, and fast, because of its national security relevance.
The national security angle.
Exactly. The U.S. is intensely focused on reducing its reliance on foreign supply chains for critical minerals. So the government has this powerful vested interest in seeing this project succeed.
Okay.
That strategic imperative, according to the analysis, it places a significant safety net underneath the stock that most mining projects simply do not have.
And that connects directly to what might be the most powerful part of this analysis. The financing and the partnerships. I mean, building a project of this size usually takes billions in upfront capital, which is, that's always the riskiest part.
It's the biggest hurdle for any major resource project, always. But Lithium Americas has essentially engineered a scenario to minimize that capital risk.
Yeah.
They've managed to lock in the funds and the customer base at the same time.
Let's start with the government backing.
Okay, so we have the conditional commitment for a massive $2.26 billion loan from the U.S. Department of Energy.
$2.26 billion.
Yeah. And the analysis really stresses that this one loan, it covers the vast majority of the construction costs for phase one.
So think about that for a second. A typical mining startup has to constantly raise cash in uncertain markets.
Right. But LAC has almost fully secured its funding for the build. It's an immense shift in the risk profile.
It sounds like they've already secured the mortgage for the whole build. So now let's talk about the guaranteed customer, like securing the tenant before the building's even finished.
That's the perfect analogy.
Yeah.
And that's where General Motors comes in. GM is so much more than a simple financial partner here. They are the dedicated customer.
Dedicated how?
GM has secured exclusivity on all of the Phase 1 production from Thacker Pass for 10 years.
10 years, wow.
This isn't some tentative agreement. This guarantees revenue the moment that mine is operational. The company knows exactly who is buying its output for an entire decade.
Guaranteed revenue for a decade, mostly funded by a government loan aimed at securing domestic supply. I mean, that structurally shifts the risk of this project from a speculative startup to something more like a utility asset, doesn't it?
It really does. It moves the entire conversation away from can they build it and moves it to when will the revenue start?
And what's the answer to that?
Well, the execution risk is way lower. But we have to note the timeline. The target for Phase 1 production is late 2027. So this isn't an immediate gratification stock. It's a long-term play.
A long-term play based on realizing that secured future value. Okay, let's pull the lens back and talk macro. The timing of this breakout feels really key. We know 2024 and 2025 were painful years for lithium prices. What is the broader industry outlook telling us?
So if we connect this to the bigger picture, the analysis suggests a really powerful macro shift. And it's centered around the year 2026.
2026 specifically, that seems very precise.
It's a classic bottleneck scenario playing out. On the demand side, you have global EV adoption just continuing its relentless climb.
Right.
But the supply side, it takes years to bring new mines online. We've seen delays across the entire sector, mostly because it was so hard to raise capital.
And that's where the interest rate environment comes in.
That's the crucial link. When rates were skyrocketing, capital-intensive projects like Thacker Pass just became too expensive, too unattractive to finance. But as rates stabilize, or potentially start to fall, these projects suddenly look much more economically viable. And Wall Street's institutional money starts coming back.
So the macro environment is turning positive just as LAC de-risks its own funding.
That's the confluence of events. You have a clear, de-risked asset poised to enter the market right as a forecasted supply crunch hits.
And this is where the buy the dip math, as the analysis calls it, comes into play. It highlights this big valuation gap.
The math is pretty compelling. So LAC's current price is around $5.21.
Okay.
You look back at its 52-week high, which was about $10.52. The stock is currently trading at a nearly 50% discount from its recent peak.
So to put that into perspective for you, the market is pricing this stock as if the lithium winter is just going to last forever.
It is. And this is the core insight of the bullish thesis. Look at the company's current market cap. It's only about $1.6 billion, give or take. Now, compare that to the net present value, the NPV, of the Thacker Pass asset alone. The NPV, which is basically the project's estimated total future cash flows, discounted back to today, it's estimated in the multi-billions of dollars.
Wait, so the analysis is essentially saying the market is pricing the entire company at just a fraction of the theoretical proven value of its main asset.
That is precisely the implication. The discrepancy just highlights the deep skepticism the market was pricing in, the risk that the mine would never be built, or that lithium prices would stay low forever.
And the DOE and GM announcements directly attack that skepticism.
Exactly. The bullish view is that the gap between the $1.6 billion market cap and the multi-billion NPV, that's the opportunity right there.
Which makes the analyst consensus targets really interesting. What are they projecting for a near-term recovery?
The price targets cited in the report are pretty consistently in the $7 to $8 range.
So from 521?
From 521, that implies a potential 35 to 50% upside, just based on market confidence returning.
Okay, let's pivot to the technicals to wrap this up. We saw the big breakout, but for a true trend reversal, you need the chart to confirm the fundamentals. What are the key levels to watch?
And the technical side offers some excellent confirmation here. First, throughout the entire downturn, the stock established this rock-solid support level, a floor.
Right around that $4 to $4.50 mark.
Firmly planted there. It shows that every time sellers tried to push it lower, big buyers stepped in and said, nope.
And the recent move breaking $5 was a huge psychological win.
Absolutely. Crossing $5 and closing decisively at $5.21 signals real commitment. And now, the analysis identifies the most critical resistance level right at $6.
$6, that's the next big hurdle.
It's the hurdle that separates a simple recovery from a confirmed bullish trend.
So how does the analysis define that definitive signal? The moment we know this is a real sustained trend reversal, not just a quick rebound.
The key bullish signal is momentum confirmation. If LAC can hold above that $5.20 level for the rest of the week and push towards that $6 mark, that confirms a trend reversal.
And what does that mean, practically?
It means the stock is officially making higher highs and higher lows. It decisively breaks that multi-month pattern of lower lows that defined the whole lithium winter. That pattern break is everything.
So, synthesizing all this for you, what does this deep dive really mean?
Well, we've established three core components of this bullish case. First, the strategic asset is foundational. Thacker Pass is real, and it's critical to North America's supply chain.
Second, the financing risk is largely off the table because of the DOE loan and that guaranteed GM deal.
And third, the market is finally, decisively reacting, with institutional money confirming a technical trend reversal is in play.
The long-term equation seems stark. The analysis makes a strong case that buying below $6 is positioning yourself for a secured, high-value revenue stream that kicks in just as the macro environment is expected to get extremely favorable.
The current discount is driven by past fear, not future facts. But we should reiterate the caveat from the report. This is a long-term resource play. You should still expect volatility.
But the trend is your friend right now.
That's what the analysis suggests, yes.
So the consensus targets are pointing towards $7 or maybe $8 in the near term. But given the de-risked asset, the national strategic importance, and that projected 2026 supply crunch, this raises an important question for you to consider as you digest this deep dive. Is LAC on a path to not just reach those analyst targets, but to potentially become a sustainable double-digit stock, pushing past $10 by the end of 2026? It really feels like a major pivot point in the lithium story.
The key is watching to see if that institutional confidence can break that $6 psychological and technical barrier. That's the level that confirms the cold is truly over.
A compelling case for a major shift in the lithium space. Thank you for joining us.